Welcome to this in-depth analysis of the backbone of the on-chain economy. Today, we are dissecting Chainlink from the perspective of a survivalist innovator that has secured its territory amidst a ruthless market. As of February 2026, Chainlink is no longer just a technology project, but a dual-purpose platform serving both Web3 innovators and global systemically important banks. This network has moved beyond the pilot phase and into full-scale production. The most striking figure defining this era is the $27 trillion in cumulative transaction value. Facilitated by Chainlink as of early 2026, this number represents the absolute trust that developers and institutions place in its decentralized Oracle infrastructure. Chainlink currently powers approximately 70% of all decentralized finance and holds a dominant share of over 80% on major networks like Ethereum. On the Layer 2 network known as Base, its market share reaches nearly 100%. This is the scale of an industry standard. Technologically, the launch of the Chainlink Runtime Environment, or CRE, has marked a new era in smart contract development. Similar to how the Java runtime environment brought finance online in the 1990s, the CRE acts as a universal orchestration layer. It allows institutions like Swift, UBS, and MasterCard to build end-to-end smart contracts that are easily connected to external data and enabled for cross-chain activity. By abstracting away the complexities of different blockchains, the CRE reduces the time to market for launching on-chain finance, use cases from months down to just a few days. A central pillar of this growth is the Cross-Chain Interoperability Protocol version 1.5, which went live on the mainnet in early 2026. This upgrade introduced the Cross-Chain Token, Standard or CCT, enabling developers to turn any token into a cross-chain native asset in minutes. The impact has been explosive. CCIP transfer volume surged by 1,072% to $7.77 billion annually. Currently, CCIP is adopted by more than 57 different chains and has activated over $19 billion in assets. High-profile examples include Coinbase, which selected CCIP as the exclusive bridge for its $7 billion in wrapped assets, and Lido, which upgraded to CCIP to secure $33 billion in staked Ethereum. Even with this dominance, we must look at the competitive landscape. Pyth Network has emerged as a significant challenger by focusing on speed and a pull-based Oracle model, while Chainlink maintains over $48 billion in total value. Secured as of the end of 2025, Pyth has captured roughly 60% of the decentralized finance derivatives market by providing sub-second price updates directly from first-party publishers like exchanges. Chainlink has countered this by expanding its own data streams product to 24 blockchains, providing the ultra-low latency required for perpetual futures and algorithmic trading. Unlike its competitors, Chainlink's architecture includes a dedicated risk management network that acts as an independent watchdog, providing a level of security that institutional players demand. From a financial perspective, the Link token is the fuel for this entire system. Under the new Economics 2.0 framework, a feature called Universal Gas creates a permanent floor for the token's value. Even if users pay transaction fees in assets like the United States dollar coin, the network automatically converts those payments into Link to compensate node operators. Furthermore, staking version 0.3 is moving the network toward its long-term goal of 75 million Link staked. Currently, the community pool is full with 40.875 million Link, which effectively reduces the tradable float and enhances network security. On the market side, as of mid-February 2026, the price of Link is consolidating near $9.05. While it faces immediate technical resistance between $10 and $10.24, institutional signals are turning increasingly bullish. The launch of Link futures by the CME Group on February 9, 2026 provides deeper capital access and improved price discovery. Additionally, Bitwise has launched its spot Chainlink ETF, making it the third most held asset in crypto ETFs after Bitcoin and Ethereum. Looking toward the rest of 2026, the Automated Compliance Engine, or ACE, is set to be the next major catalyst. ACE will allow institutions to enforce regulatory policies like identity, verification, and anti-money laundering directly within smart contracts. By removing legal barriers, ACE will facilitate the tokenization of everything other than cash. As the industry moves toward $4 trillion in tokenized real-world assets by late 2026, Chainlink is positioned as the standard interface for both traditional and decentralized finance. In summary, Chainlink is the unsexy but essential plumbing that makes global on-chain finance possible. While the price may currently reflect short-term market consolidation, the fundamental utility of the network is growing at an unprecedented rate. Analysts suggest that if institutional adoption speeds up as expected, Link could target a price range between $45 and $75 by the end of the year. This is not just a coin for speculators, it is a fundamental asset for those who value the structural shift of the global financial system into a unified, interconnected industry.